own part. All right. So he will send his part as A, and then I'll send my own part as B. All right. Now, if you go down to the 30 minutes time frame now for this setup, you had what? The premium. You had your this thing is going to be in the first 50% because this is a sell now, and then this was what the first stacking point, which is what your entry. Of course, the confirmation that was created on this particular setup is the engulfing. That's the bearish engulfing candlestick, which is what this. And I told you that when it closes below your entry, that is when you sell, start selling. All right. And then after that, what the price do? The price created what this next engulfing candlestick, still in the first 50%. Now, for me, I wouldn't have taken these particular confirmations. I mean, people do their stacking on different time frames. People stack on 5 minutes, people stack on 15 minutes, but then I prefer my stacking positions to be what on the 1 hour time frame. In a case like this now, there was literally no stacking point for me except for my entry. So I would have actually, except price does something like this now, maybe reacts to this demand and then pulls back into the 50% to create what an engulfing, then that would be what a stacking continuation for me. But in this case now, no stacking point was created on the 1 hour. Although if you go down to the 30 minutes, I think you'd see what 2 stacking points. And in a level like this now, this is our next setup. This was a buy on the 1 hour time frame. Now, this particular buy was like a type B, right? Whereby price did what this was a low, a high, a low, a high. But this particular buy was not really of high probability, and that's just because the inducement level did not pull back into 50%. All right. But if you go down to like the 30 minutes or 15 minutes, it will look like a type B because price did what? Price created an order block before leaving the first 50%, which is what this particular order block here. All right. This was what price did before leaving what the first 50%. So something just like this, where you have this before what the break of this high. So this is like a type B entry model on the 30 minutes time frame. All right. So having something just like this, and then price mitigates, the first thing you're going to be looking out for is your the first thing you're going to be looking out for is your confirmation candlestick at entry. I told you that when it comes to synthetics, you don't set limits. When price mitigates your entry, you need to look out for your confirmation, whether your hammer or your engulfers or whatever. I'm sorry, this is already 10 p.m., but then let me just continue. I'll soon round up, right? All right. So your hammer, your pin bar, your doji, your engulfing candlesticks. That's either the bearish or the bullish engulfing candlesticks. Those are the first things you look out for when price mitigates your entry. And then when you see them, that is when what you set your buy position. That is when you actually start buying at entry. And I told you that at entry you're using what you're executing 40 to like 50% at entry. Now the remaining ones is going to be what spread across other entry levels. All right. Now, when it comes to pairs like this, when you realize that okay, they are actually ranging, you can decide to what switch to the 2 hours, or you can decide to what buy on the 1 hour. It depends on how spread your account already is. Now, in a case like this, now let's say on the 1 hour time frame, now when you're done actually making your analysis, what you do, you pick out your Fibonacci 2 from your stop loss to what your take profit targets, wherever your take profit targets may be. If you're probably targeting like this particular high, let's say something external or above, something like this, right? If you're going higher, your take off your Fibonacci 2 will still be what's higher. If you're targeting this last high, your Fibonacci 2 is going to be what's still at that last high, right? From like your stop loss towards your take profit targets, wherever your levels will be, that is where what your take profit targets is going. That is where your Fibonacci is going to be. All right. So you're going to mark out from your stop loss towards your take profit, just like this. And then you're going to be what stacking at the engulfings that are found what in the first 50% of price level. All right. Now in this case, now you can see that we had what when price mitigated your entry, right, which was at this point, you had your hammer candlestick that will close above entry, and then continuing, I think on the 30 minutes time frame, this should have created good engulfings, provided that because you're targeting like internally here now, you may not have like had the love of them. But if you look at what happened on the 30 minutes time frame now, you had price do what after creating the first hammer candlestick on entry. What happened? We had what this first engulfing candlestick, which is what your second stacking point. So this is like the first stacking point. This becomes what the second stacking point, and then price did what? Remember that this is not what an engulfing. An engulfing should engulf from what the right side of the market, but then this becomes what your third stacking point, which is what the next engulfing that price created, and then what happens? This becomes what your fourth stacking point. This becomes what your fifth stacking point, and this is what your sixth stacking point. I'm going to teach you guys how to stack at this level. I'm just trying to help you to recognize this stacking levels, and you realize that these stacking points, especially when they're what in the discount, which is the first 50% of price, like hardly does price what we trace on them. Go and check out this synthetic charts, check out the setups that you've been able to have on synthetics, and then try to look out for this engulfings in the first 50%. You realize that price hardly what traces on them. The retracement starts coming from what the second 50% of price leg. Like let's look at this engulfing now that was created in this 50%. All right, this particular engulfing in the premium, right? This was an engulfing candlestick. Now, for somebody looking to stack at this level now, you probably would have stuck at a level like this, and then what happens? You can see that what price retraced on you. But then when it comes to the first 50%, majorly there's just what upward movements. The only things that can happen is either that price does what price comes back to what mitigate these engulfings, just like maybe mitigate before what continuing. But hardly do you see what price takeouts engulfings in valid demand or supply zones, except that setup was not what's valid in the first place. Like that setup is not what a win setup. But for a good setup, stacking at discount when you're buying or stacking at premium when you're selling, you realize that what hardly those price would retrace to take out the stacking points. All right. And then if you look at let me see if there's something on volatility 75s. This is one of my best synthetic pairs, by the way. I think it's one of my most traded. So this 75s, it's a good pair relatively in terms of cost and all of that. All right, but then let's look at what happened here on this particular pair. This setup did not hit take profit, by the way. I think price retraced on this supply zone, this particular level, and that is why I usually talk about targeting these particular levels. Like if you're going to set a target, let it be somewhere like this when it comes to having this internal demand and supply zones. 1:5 is a good setup. All right, so that you don't have setups like winning setups, you don't make losses in setups that should have ended as wins. Do you understand? So for something just like this now, let me say if I was targeting here that I actually initially targeted, what would I have done as price came to my entry? I would take my Fibonacci to map out towards 50% of price leg, and then from my stop loss to my take profit targets, and then the engulf is now in cases like this. Now this is like a lot of price movement. That's why I told you that when you have this type of price movements, what do? You actually want to go to the 2 hours time frame instead to look out for what these engulfings. Although they are valid on the 1 hour time frame, but then you want to be looking at what a clearer price action when price is ranging compares like this. Now on the 2 hours time frame, it becomes what a bit more organized than the 1 hour time frame. And even if you extend toward if it's still like a bit overwhelming for you, you can extend toward the 4 hours. It's only in cases whereby price is ranging like this that I do what go to higher time frames until it becomes what clearer. All right. Now on the 4 hours time frame, you have what your confirmation on this particular setup was more like what the hammer candlestick, which was what the first mitigation the price created. So the moment the hammer candlestick closes above entry, and that is what when you start buying, your entry is what your first starting point. Now mapping out your 50% from stop loss to take profit target, you can have what this becomes what your second what starting point at this level. This becomes your second starting point at this level. This is what the next, okay, this was not really an engulfing here, but then this becomes what your third starting point at this level. Now, I told you that hardly had this engulfing candlesticks taken out, especially when they're in the discount of price leg. right? The worst that can happen is that price comes and treats them as what demand zones, more like mitigates them, just like what happened there. You can see this entire retracement here was to mitigate this particular first stacking point, creating what the second stacking point, and then you have what price pulling back again to mitigate what the third stacking point, this stacking point again to create what a next stacking point, and then another stacking point before it eventually was pulled out of the 50%. So realize that hardly at this what stacking points and all these stacking levels sticking out in the discount of price leg, and that is why I emphasize on what making sure that your stacking levels are what in the first 50% when you're buying. So in the discount when you're buying and in the premium when you're selling for something just like this. And these are like 5 stacking levels on the 4 hours time frame. When you have ranges like this and they seem like unclear or a bit too much on the 1 hour, you can just go to 2 hours. Usually most of the clarity when price is ranging on most of this space come on the 2 hours. But the 2 hours still looks like a bit busy, like it looks like too busy, you can still increase the time frame or until you see something better that looks more organized. All right. And then even if you go and you see if I still have something here as well. Okay, this is another setup. I think I took this particular one on this is 75S, yeah. All right. And this particular setup is more like a type B entry model, right? Where you have your sweep and then price does creates this level of inducement before sorry, give me a minute. Price creates this level of inducement before finally breaking out of taking out the previous high. All right. Now in a case like this now, he had price take out this high and then price do what? Give you an extra because structure confirming that okay, the trend is now bullish. Okay. But then I told you that when it comes to targeting on synthetics, you have to be targeting next supplies and next demand zones. And that is why when you see my setups most especially, I think I've talked about this for most of you that follow me on Twitter. I've made a trade displaying this thing before. All right. These internal highs and lows, they can take price back down at any time. All right. So it's better to be safe. You make your money and you go than having price retrace on you after making money. You end up not taking anything because price started retracing from a demand zone or a supply zone when you're buying, or starts retracing from a demand zone when you're selling. So you just target next 1 hour buy, next 1 hour sell, whether uptrend or not. Like when you're buying, price is not uptrend, you realize that the higher high can take price back down to retrace before putting in a new high for like something that just happened here. Of course, this is going to be of course, this is a higher high that price must take out. All right, but then you already have like more like a supply order block resting here. That's a bearish order block, right? It's a higher high that price can take out, but then price can easily mitigate that whole range, which is this entire range now, and does retrace before finally taking it out. So you don't want to experience a retracement in your account with this pullback, and that is why I talk about targeting this next demand or supply ranges. All right. Now back to what I'm talking about here. When it comes to stacking at specific points, what do you do? When you're done with your analysis, you take out your Fibonacci tool, you map out from your stop loss to your take profit targets. Now, everything you're going to be doing in terms of stacking is going to be done in the first 50%, which is the point at which that is at this level. This is your first 50%. All right. So every stacking that you will do will be at this point. Now, price mitigates your entry, gives you more like this particular confirmation. Although I would prefer to consider this engulfing as a confirmation that price created on this POI. All right. Now your entry is your first stacking point. Your next stacking levels are going to be inside of this first 50% of price link. Now, if you look at what happened very clearly, so you don't make mistakes now, this particular candlestick, this is not an engulfing candlestick. I already told you that engulfings must happen from they must happen from the right. This is not an engulfing candlestick. Neither is this one an engulfing candlestick, all right? But then this is this one is an engulfing candlestick. Your bullish candlestick must engulf the top of the bearish candlestick. And that's the same thing that happened here. This is what an engulfing candlestick. This is what an engulfing candlestick. All right. So any point that you're going to be stacking in the first 50% must be what fully engulfed. So let's continue. Here you had what? You had your first stacking point at your entry. You've probably opened like 50 or 40% of your positions. All right. And then you next thing you see that as price is proceeding to the upside, you're already in profits, probably in a $10 account. I think with this movement, you should be up like $25 already. This is 75x. Depends on your lot sizing though. You should be up like times 2 to times 2.5 already with this movement to the upside. All right. So now you no longer have just $10 as your balance. You now have what, $24, $25 to open more positions with. And then price creates what this next specific point, which is what the next engulfing in the first 50% of price leg. This is what your second stacking level. All right. The whole idea of this stacking level is you understand that hardly does what price take out this engulfing candlesticks in the first 50%. The worst that can happen is that price comes back to mitigate them. Like in this case, now you can see that price pulled back into this level now to what mitigate this stacking point and then still continue to the upside. But hardly do you see them were taking out in the discounts. All right, this becomes what your next stacking point before price eventually was left the first 50%. All right, for somebody that would have been targeting this level that I targeted, you would have had only what, just this one and this one as your stacking opportunities on day what. Okay, let me go to the 1 hour time frame. Sorry, I initially forgot that this is the 4 hours. All right, so this is it on the 1 hour time frame. Now on the 1 hour time frame, you even have more stacking opportunities. Okay, this is not the setup. I think it should be this one. All right, so this is it on the 1 hour time frame. Permit me to just take most of these crashes out. This is going to take a while, so let me just continue with them though. All right, so this is set up on the 1 hour time frame. Now price mitigates your entry and all of that, and then you're looking out for what's proper engulfing candlesticks as your what, as your stacking levels. So here you have what, you have your first stacking point on the 1 hour time frame. I already told you that if the 1 hour time frame is looking too much for you, you can go ahead towards the 2 hours time frame. It's what is going to be a bit more organized. Or instead, you would continue on the 1 hour time frame. For me, I usually do most of my stacking on the 1 hour time frame. But if it looks too much like what happened here now on this particular setup, I would have done that on the 2 hours time frame or even extend to the 4 hours time frame like I did. But then for this 1 hour time frame, I don't think it's looking a bit too bad. All right, price mitigates your entry, and then the first thing you start looking out for what is engulfing points. Now we have our first engulfing stacking point at this particular level. This would have been what your second stacking point after what your entry. Your entry is your first stacking point. The next engulfing after your entry, still in the first 50%, is what your second stacking point. Now note that this is not an engulfing candlestick, so this would have been what a stacking point on the 1 hour time frame. But continuing, we had what a next engulfing, which is our third stacking point with this particular one here now. This would have been what the next stacking point. And then before price left the 50%, he created what a last stacking point with this what engulfing candlestick. And then you can see that these stacking points did not what experience significant what pullbacks. Instead, they were more like mitigations. Until price did what left the first 50% and what eventually what hit your take profit targets. All right, this is it for 75S. Let me see if I have one more, sorry, before the class ends. I know that a lot of you would have become impatient by now. I will soon be done. Okay, so this is 75S. This was today's price action for a sell, our typical type A entry model, your sweep, your breakup structure, and all of that. Price took out this particular higher low, giving you what a change of character. And after taking it out, he gave what he actually broke structure to confirm that okay, this character is what eventually changed and we are what in a downtrend, and then came back again to give another lower high and lower low. That okay, this is what a downtrend, and then you had what the sweep of liquidity at this level, a breakup structure at this level, and what another breakup structure at this level. This was the first breakup structure, and then this was the second breakup structure at the level, right? Giving us our typical type A entry model. All right, so this is like this particular one now. There was no stacking point on the 1 hour time frame, although looking at the overlapping supply zones, which I already told you that there was supply zones on the lower time frame, these overlapping weeks, right? They would have been what stacking points on the 30 minutes, or on the 1 hour time frame, there wasn't. So, but then looking at what happened there as well, I already told you that when price mitigates your entry, the first thing you want to do is mark out from 50% towards from your stop loss to your take profit target, just like this. And then moving on to the 30 minutes time frame to check out for stacking points, right? In this particular case, you would realize that price actually gave like we had the hammer confirmation on entry, and then we had what a stacking level at this point. This would have been another opportunity to add what more positions. And then we had this last engulfing before price left 50%. And then even the pullback back into the 50% created what this particular engulfing before price what eventually broke out of the 50%. So on the 30 minutes time frame, we had what the entry as your first stacking level, the next engulfing as the second stacking level, the third one, and then the fourth one before price eventually was hit take profit targets. All right. And then if you're looking at this particular price action today now on the 30 minutes time frame, you would realize that you had like about 1 or 2 stacking levels. All right. For something like this now, there was a stacking level at this point, which is this particular one. And you can see that even when price pulled back, the pullback was to mitigate and not what to take out before price eventually hit take profit targets. And that is why this particular this particular stacking points must be in the premium when you're selling, and in the discount when you're buying. So this is just like a class on identifying these stacking points. In our next class, we're now going to look at how to execute the stacking points. Like this is just like how to look out for these starting points. Then the next class is how to trade the starting points, or how to stack at these levels. All right. I'm sorry that this class is a bit longer than it should be, but then that's how synthetic is. One example to another, one example to another. All right. Now, notable to mention the I think the subtopic groups. So far, you guys have been doing really amazing, but then I would really prefer if the subtopics remain for what they are supposed to be for. More like the trade idea groups is just for you to drop your trade idea, which is like a trade idea that you consider valid. It has met all of your criteria and all of that, right? It's just like a trade idea that your mates, that's like your course mates, can also look out for to see if there are corrections or if they align with what they also think as well, right? So the trade idea group should just be for valid trade ideas that people can look at, but there shouldn't be discussions there. That's why there's a short and discussion subtopic. All right. If you have anything that you want to talk about, you can just copy the link and then send it drop it on the chat and discussion group, and then tag whoever dropped it, and then you guys can battle it out. The winning trades as well is just for you to drop your before and after, right? Your setups that played out there, but they're not for discussions. The losing trades as well, just for you to drop your trade ideas that didn't play out. They are not for discussions. Anything that someone drops that you think you have an opinion on, just copy the link, send it to the chat and discussion group, and talk about it with them there. But don't discuss on these specific channels. Even the announcement group is strictly for the admins. The basics, the live sessions are strictly for the admins. If you have questions, use these questions subtopic. All right. If you think you're a slow learner and you're not following, you have something that you think would draw me back, all right, you can just drop the concern on the slow learners topic, and then I'll attend to it definitely. If I don't have time, I'll try to create time for it. All right, but then let this subtopic be used for what they're supposed to be used for. So I want you guys to go over what we've done today with tomorrow. There's no classes tomorrow. Definitely tomorrow is Sunday, but we should meet on Monday to continue from where we stopped by 9 p.m. If you have any question as usual, this class is long already, so I won't be able to type in questions now. But then you can drop your question on the question subtopic, and definitely before midnight you should get all of the questions there answered. All right, so thank you so much for joining this class and sticking with Sampon so far. I'll see you guys again on Monday, 9 p.m. Remember that the recording will be dropped in 2 parts, Stan's part and my own part. So until we see you on Monday, do take care of yourselves.